Tesla reported second quarter production and delivery numbers that sent the stock price up by more than 5%. It wasn't that the production and delivery numbers were good. It's just that there was so much fear and investor pessimism surrounding the company's quarterly production and delivery results that the numbers were less than feared. So investors were expecting something disastrous, and it wasn't a disaster. And that relief sent the stock price higher by 5%. So I'm going to share with you the details of the latest quarterly production and delivery numbers, as well as insights into the company's energy segment, which is growing to be a more important segment now. But still, the delivery and production numbers are more important as of right now because those numbers still consist of the vast majority of the company's sales and profits overall.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so for the second quarter of 2025, Tesla reported deliveries of 373,000 and other model deliveries of 10,394. Other models consist of the Model X and the Model S, the more expensive versions of the sedan and the SUV, as well as the Cybertruck. This segment of Tesla's sales figures, delivery numbers, were more disappointing than the overall delivery numbers, which were down by roughly 14% year over year, which was worse than the previous quarter, where sales and delivery numbers were down by 13% year over year. So the decline is worsening for Tesla from Q1 to Q2. That's concerning, but the decline is not so bad, right? That second derivative of decreases, investors would hope to be improving, right? If you're investing in a business that's going backwards, you'd like to see that decrease slowing down so that it's making progress towards becoming break even and then eventually turning positive again. But for Tesla, the declines are worsening. 13% year-over-year declines in Q1, 14% year-over-year declines in Q2, so worsening trends. Now, the good news is that deliveries increased substantially from the first quarter, where total deliveries came in at 337,000. In Q2, total deliveries came in at 384,000. So Q2 has always been a better quarter than Q1 for Tesla, cyclically speaking. But since the company's facing so many difficulties right now, so many headwinds, competition is increasing, the brand is tarnished because of the leaders' political movements and political actions. And so investors were afraid that maybe Q2 would be a lot closer to Q1 and maybe even worse than Q1. So that part of the fear from Tesla stock investors was relieved, and that was good news. That's part of the reason why the stock was up by more than 5%. Now, let's talk a little bit about the energy segment. So they deployed 9.6 gigawatt of energy storage products in Q2, and that was below the 10.4 gigawatt hours in Q1. So the energy segment is slowing down, and it barely increased from the same quarter last year. So for the second quarter of 2024, they deployed 9.4 gigawatt hours of energy, and this year they did 9.6 gigawatt hours. So barely an increase in the energy segment, which was the part of the business that was growing substantially, one of the only parts of the business that's growing substantially to offset its declines in vehicle deliveries. Now, I talked about how the energy segment is also under pressure because of the tariffs implemented by President Donald Trump. The management team said that they're going to face higher costs and more difficulties in this segment for the back half of this year. Now, as I mentioned, the other models segment is troubling to me because now you've got 3 models instead of 2 in this segment, including the Cybertruck now, and you're declining significantly. In the second quarter of 2024, you had 21,551 deliveries of other models, and this year, 10,394. So slashed by half. And to make matters worse, this year you've got 7% of those sales that were subject to lease accounting, whereas this year it was only, whereas the prior year it was only 1%. So fewer and fewer people are interested in buying these higher priced models. And the only reason, or not the only reason, but one of the reasons why they are buying is if they're incentivized with very low priced lease offers at 7% of these offers. And that's troubling to me because Tesla spent billions of dollars developing and introducing the Cybertruck, and it's not increasing sales in that segment at all. It's actually sales are declining in that segment still, even though you introduced that third model. So overall, not a good quarter for Tesla in terms of delivery numbers or the energy segment, but that was to be expected. And these declines are better than expected. Investors were fearing something much worse because of all of the headwinds I've been talking about for several months now. We were getting data uh, every month from Europe, and Tesla sales in Europe are falling by 40-50% in some regions. And so with the year-over-year decline in deliveries of just 14%, when we were getting data from Europe with Tesla sales falling by almost 40-50% in some regions, and then we were also getting data from China where new lower priced models were coming into the market, taking market share away from Tesla. Those are two really big segments for Tesla sales, and the data was coming in that Tesla was losing significant market share. And so when Tesla here reports year-over-year declines of just 14%, it was a big relief for Tesla stock investors. Now, Tesla stock investors understand, I think, that the electric vehicle segment is going to be under pressure. And I think the CEO knows that too. That's why for many, many quarters now, Tesla CEO has been trying to convince investors very successfully, I will say, to not pay attention to EV sales, saying that if you're investing in the company for EV sales, you shouldn't be investing in the company, and pointing the attention to future products like the robo taxi and the Optimus robot. Very successfully, I will add, because Tesla stock is trading at a valuation more than 10 times most other car companies, and more than 5, 6, 7 times most other AI companies like Nvidia, Microsoft, Amazon, Alphabet, etc. So Tesla CEO has very successfully shifted investor attention away from the bad news and presented a very rosy and bright picture about the oncoming robo-taxi segment and how it's going to add trillions of dollars to the company's market cap and trillions of dollars in revenue and profitability. That's why I've been saying Tesla is the best marketing company in the world. Very few companies can turn these kinds of negative results into into a $1 trillion valuation company. So that's one of the main reasons, if you're a Tesla stock investor, you can be encouraged by the fact that the CEO will do a masterful job at spinning any number in a positive direction. So you'll feel like your shares, the value of your shares, will always have that upside, that tailwind, because of the CEOs and the management team's marketing ability to spin any of this negative information into positive territory. So the company has already started testing robotaxi. That will be the story moving forward. When the company gives more details about their quarterly financial results, you can expect more of the same from Tesla, more of the Tesla management team telling investors not to pay attention to the declines in the EV segment, and pay attention to the company's robotaxi segment and the oncoming Optimus robot development as well. So a lot of talk about that, and I think this was a good news type of situation for Tesla stock investors, because as long as this segment is not crashing, uh, I think it'll be okay for Tesla stock investors because of that ability to market this information positively. So 10 to 15% declines, I think, is okay for Tesla stock investors. This is much better than I was expecting. So kudos to the company for keeping sales from crashing too significantly. And now the focus can shift towards the robo-taxi. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.